Hello everyone, this is Jatin from gladtutor.com, and today we are going to talk about the reconciliation of cost and financial accounts, which include its meaning, need, reasons, procedures, format, and we will also cover one practical question of this topic. So this is the part 11 of our cost accounting series. To watch our previous video regarding wage payment system or any other cost accounting subject, then click on the upper I button, or I have also put both the links in the description. Or if you are someone who is looking for cost accounting notes, so you have landed at the right place. I have also put the link in the description about the same. You can also check out our notes. So if you are new to our channel, then don't forget, after watching this video, subscribe our channel and turn on the bell icon, so that if in future if we upload any video regarding cost accounting or any other management subject, you will be notified. So let's get started. So firstly, we will start with the meaning of reconciliation of cost and financial accounts. So the term reconciliation has taken from the word reconcile, which means to check or tally or equate. The reconciliation is done to reconcile both the accounts, or you can say both the profit and losses of financial account and the cost account. When cost accounts and financial accounts are prepared separately, the different sets of books, profit loss results do not match with each other. In this case, both the accounts are necessary to reconcile. That's why the term reconciliation is done to show the reasons for the difference in the results of account. It is done to make the arithmetical accuracies to between the both the accounts, so that both the accounts should be equate. So this is all about the meaning of reconciliation of cost and financial account. Now come to the reasons of reconciliation of cost and financial account. The first reason for the reconciliation of cost and financial account is the different treatment of item. So there are so many items which are different treatment in the cost and financial account. In the cost, if you talk about the cost accounting, the items in the cost accounts are taken, or you can say are calculated on the estimate basis. Cost accounts work as a control device so that we can forecast that we will achieve our standard or estimates, right? Estimate or standard can be nearby to the actual, but it can't be equal every time, right? So this leads to the difference in the results of the cost and financial accounts. So there are many different items which are treated differently in both the accounts. First one is the direct material. The standard or estimated cost of the direct material used in this production process is different from the actual cost. That's why the difference in both the accounts can be increased or decreased in the price of material. Can be due to increase or decrease in the price of material. So the second difference is the direct labor. The difference in the estimated or the standard cost of direct labor can be difference with the actual due to the change in the wage payment system or the work hours. So many times workers are paid higher because of their increased DA or bonuses. Third one is the overheads. In cost account, the recovery of overhead is based on the estimates. But in financial account, the actual expenses are recorded, right? So this results in due to the under or over recovery of overheads. The under or over recovery can be carried out or carried forward to the next period. Depreciation is also another reason for the difference of the cost and financial account. In both cost and financial account, the different method of depreciation is used. So in cost account, the depreciation is charged according to the machine hour rate method, but in financial account it is charged according to the fixed installment, or you can say or there is another method is diminishing the balance method. So this was about the first reason for the reconciliation of cost and financial account. The second reason is the valuation of stock. So the difference in valuation of stock in both the accounts are as follow. First one is raw material. In cost account, the materials are valued at LIFO or FIFO. LIFO is the last in first out. So in the LIFO, we will firstly use our old products which are made in the last year, or you can say the produced in the last year. And first in first out, in this we use our new products, or you can say materials. But in financial account, the raw materials are valued at their market or cost price, whichever is less. Work in progress. There is also a difference in the valuation of work in progress in both accounts. In cost account, the work in progress is valued at the factory cost, but in the financial account, it is valued at the production cost. The third difference in the valuation of stock is the finished goods. So we have covered raw material, work in progress, and now it comes to finished goods. In financial account, the cost of finished goods is valued at market price or cost price, whichever is lower. But in cost account, the cost of finished goods is valued at the production cost. So the valuation of stocks give rise to the difference in both the cost and financial account. More valuation of opening stock in cost accounts refers to the less profit in cost account, and the more valuation in financial account refers to the more profit in cost account, and vice versa, right? So this is all about the difference in the valuation of stock. Now come to the items appearing only in the financial account. This is also another reason. So there are certain items which is only included in financial accounting, but in the reconciliation we have to include in cost account also. So the items are purely financial charges, purely financial income, and the appropriation of profit. So in purely financial charges, these are the items which includes. First one is the loss on sale of investment, interest on bank loan, penalties payable for the late completion of taxes, damages paid by law, discount on the issue of share, loss due to shipping of machinery, and the expenses of the company transfer of office. So these are the purely financial charges, and in purely financial incomes, the items are the interest received on bank account or and the FD, rent receivable, dividend received on investment, and the profit on the sale of fixed assets. So these are the purely financial incomes, and the appropriation of profits are taxation, transfer to debenture redemption fund, transfer to general reserve, preliminary expenses, underwriting commission, charitable donations, amount written off as goodwill. So these are the items in the appropriation of profits. Now come to the items appearing only in cost accounting. There are certain items which are only included in the cost account and not in the financial account. The items are as follows. First one is the notional interest charge on its own capital. So companies in the beginning, or whenever they start a new product or something, they plan to they assume that they are giving loan to themselves, and they start charging interest on its own capital. So that they also add in the cost accounting. And the notional rent, they also assume that the place or the factory in which they are producing their raw material or products, it is also taken on the rent. So they also charge the notional rent from themselves. Depreciation on assets also is the another thing. So these items reduce the profit in the cost accounts. So there is another thing is abnormal losses and gains. These are not completely included in cost accounts. In financial account, these are taken to the profit and loss account. So in the former case, the results of cost account will differ with the financial account, but in later case there will not be any difference. That's why no adjustment is done for the absorption of gains and losses. Some of the items of absorption of gains and losses are abnormal wastage of material lost by theft or fire, or abnormal gain in manufacturing. So these are the reason for the difference in the results of cost and financial account. The need for reconciliation doesn't arise in those firms where is one set of books is used for both type of account, but it is used in those type of firms where are separate set of books for both the cost and financial accounts. So now come to the need for the reconciliation, like why there is a need to do the reconciliation of both the cost and financial accounts. The first reason, or you can first need, is it is done to make the arithmetical accuracy. That is a very valid point, because the arithmetical accuracy is very much important. And the next one is it is done to ensure that no expense and or income is left to record. It helps in proper decision making because of the accurate results prepared in reconciliation. It shows the reasons for the difference in the results, and it also makes the coordination between the cost and financial account. So these are the needs for the reconciliation of cost and financial accounts. Now come to the procedure of reconciliation of cost and financial account. The procedure for reconciliation statement is done by the reconciliation statement or the memorandum reconciliation account. The reconciliation statement is a memorandum reconciliation account to reconcile the profit of cost and financial account. So we will firstly talk about the reconciliation statement. If the profit as per the cost accounting is taken as the starting point, then we have to find out the profit as per the financial account. So they are following kind of items which are added or deducted. So we have one example for you, or we have you can say a format of the reconciliation of cost and financial account. So firstly we have to add we will take start with the profit as per cost account. Then we add the over absorption of overheads, financial incomes that are not recorded in cost accounting. We add those incomes. We add the undervaluation of closing stocks, and we add the overvaluation of opening stock, right, and the items that are charged only in cost accounts. Then we reduce the under absorption of overheads in cost accounts, which we and in the same way we have added the over absorption of overheads, and here we are deducting the under absorption financial charges that are not considered in cost account, and the undervaluation of opening stock and the overvaluation of closing stock. After doing addition and deduction, we will get our profit as per financial account. So we have talked about the reconciliation statement and its performer. Now come to the memorandum reconciliation statement. In memorandum reconciliation statement, the profit of the cost account is shown on the credit side, and the items which are added to the profit of cost account are shown on the right side. So these items, the items which are deducted from the costing profit, are shown on the debit side. So as you can see in the credit side, there is a buy profit as per cost account, and we are adding all the items like financial incomes not recorded in cost account, rent received, interest received, dividend on sale of assets, items charged only in cost account. And debit side we are adding the expenses, discounts, fines and penalties, loss on sale of assets. So this will be better explain. I will better explain this thing to you by one practical question. So we have one practical question in which is the financial books of the companies has a net profit of 1,27,560 rupees, and the cost account has a net profit of 1,33,520. So as you can see, both the accounts are not equal. So we have to reconcile both the accounts. So the net profit of both the accounts are for the year ending 31st December 2003. So this is the question. We have got the under recovery of factory overheads in the cost account. So what we will do, so firstly we will start with the profit as per cost account, right? Profit as per cost account, and we will add the things of the financial account, and also we will deduct the things from the financial account. Then after adding and deducting, we will get the profit as per financial account. So there is one thing is under recovery of factory, under recovery of factory overheads in the cost account, over recovery of administrative overheads in cost account. So we will add this over recovery of administrative overheads, and the depreciation charge in financial account, that is 7320. If there is something other depreciation, if you can see, yeah, we have depreciation recovered also. So we have recovered 7900, and we have charged 7320. So what we will do, we will subtract 7900 by 7320, and and you can say the result which we will get from subtracting that, the amount we will add in the profit as per loss account. As you can see, we have added the 580 rupees over recovery of depreciation. Now come to the interest received but not included in the cost account. We will add this interest here, 900 rupees. Bank interest income tax debited in the financial account. This is the expense. We will deduct this expense here. How much it was? It was 1200 rupees. As you can see, we have deducted the 1200 rupees. And the one more thing which I forgot to tell you, the first one, under recovery of factory overheads in cost account, that is 11,400 rupees. This we will also deduct, right? So we have done up to income tax. Now come to the bank interest credited in the financial account, that is 460 rupees. So we will add this money 460 rupees, and stores adjustment credited in the financial account, we will also add this thing. Now we are left with the expenses. Rent charge, we will like deduct this amount. Dividend paid, deduct this amount. Loss of obsolescence, deduct this amount. Depreciation we have already covered. So firstly, as per the profit, we have added the five things: over recovery of administrative overheads, over recovery of depreciation in cost accounts, interest received but not included in cost accounts, bank interest credited in the financial accounts, store adjustments credited in the financial accounts. So these five items have a total of 11,280. So we will add those amount with the profit, that will result in 1,44,800. So now we have deducted the five more things, that is under recovery of factory overheads 11,400, income tax received 1,200, rent charge 1,720, dividend paid, loss of obsolescence. So all these five items have a total of 17,240. So when we will deduct this amount, we will get a profit of 1,27,560. So as you can see, we had the financial uh, net profit of 1,27,560, which we have done, which we have made is equal to the same amount. So this is the way to do the reconciliation of cost and financial account, and I have give solved a practical question in front of you all. So I hope you guys have liked this video. If you like it, make sure you subscribe our channel, so that in future if I upload any video regarding financial management or any other management subject, I upload videos about all the management subjects in 2 or 3 days. So if you like this video, make sure you like, and don't forget to subscribe our channel Glad Tutor, and turn on the bell icon. And in case if you are looking for the financial management complete notes, I have the notes. I will put the link in the description, you can check it out. Till then, thank you, bye bye.